It's Blake, Goss, Christ, our King. On Vision Christian Radio, it's Neil with you, the Thursday edition of 2020, and a conversation I'll invite you to join into. Very shortly we'll open our talkback lines, get a question together, or a comment, even a critique for the sorts of things we'll talk about. You might have a scenario you want to run by our special guest today. Shortly we'll open our talkback lines. We're talking finance again today with... We'll start with a big picture of what's happening to economies both here in Australia and around the world and how that affects all of us. The family budget, or you might have a small business. Inflation figures came out yesterday, higher than expected, 6.8%. What does that mean? Energy prices. Well, they are rising, and expect, wherever you are, some sort of rise between 20 and 30% over this next year. The pressure is on, so we are concerned about how we navigate the family budget and any issue you'd like to raise today with Alex Cook. He's one of our key commentators and the founder of Wealth with Purpose. Alex is a former stockbroker. He's been a successful financial planner, and he's the founder of Wealth with Purpose. His ministry is to help equip Christians to honour God with their finances by teaching sound financial skills. Alex Cook, a special welcome back to 2020.
Thanks, Neil. Great to be back.
Alex, let's start with a bit of a view of what's going on nationally here in Australia and things that are affecting us from around the world. Where do you start with a bit of an overview of the major economic news?
Well, probably the two big ones that you just mentioned in your introduction are really the important ones because of their potential flow-on impact to Australian households and obviously listeners. And that was firstly the inflation figures that came out yesterday, and they were slightly higher than expected, 6.8%. Now, what does that mean? It means year on year, so it's work on a year-by-year basis. Prices are up 6.8%. Of course, you always wonder how do they construct these things, because it depends on what items in your budget, what you spend your money on, will obviously affect where you're really feeling the pinch, whether it's rent or mortgages and so forth. But inflation is obviously a big concern because it's going to be the major driver as to what central banks, and in this case, the Reserve Bank of Australia, and the likelihood of them increasing rates, because obviously they meet next Tuesday, and so the probability of a rate rise has now increased. Previously, most economists thought they would bypass it, but it looks like they're going to probably, the probability is increased, it'll go up. The second thing you mentioned was energy, and the energy regulators of Australia last week came out and said they expect nationally prices would go up somewhere between 25 to 30%. Obviously, it depends on where you live. And of course, that was, an election promise to bring prices down. But, that was always a bit of a pipe dream, if you ask me. But the bigger concern is actually more the longer term with energy prices, because over the next, between now and 2035, roughly 40% of Australia's current power generation is scheduled to close, and like we've just had the Liddell one in New South Wales. So those sort of things, we need good baseload supply of energy coming on to replace it, so that we don't see these ever spiraling energy prices. So they're to me the big ones, and obviously they're going to affect household budgets.
So inflation is higher than anticipated. Energy prices are rising, and there's challenging times ahead for the power generation industry. And if you're in a small business, you're recognising that. If you're going shopping at the supermarket, you're recognising that those dollars that you're spending on your weekly shopping expedition are much higher than they have been even just 12 months ago. All this means likely higher interest rates, and higher interest rates, more of a squeeze on household budgets. This is a challenging time for a lot of people, Alex.
Yeah, look, absolutely. I mean, I think we're really seeing the temperature rise. My concern, obviously, is that we don't really know where interest rates are going to end up. At this stage, as I say, inflation's looking sticky, as is the term they often use, i.e. it's saying higher than they would like and not coming down as fast as they would like. And of course, therefore, the risk being that they keep putting pressure on interest rates. Now, the average Aussie has had a 50% increase in their mortgage repayments over the last 12 months. So that's a big flow-on effect. But now I think is the time to think, well, what do I do about it? How do I navigate that? And to me, the big thing that everyone needs to think about, given the more challenging season that we now find ourselves in, is how do you build margin into your finances? How do you protect yourself from some of this stormy weather? You know, is it you cut costs? Is it you increase your income? But how can you find ways to save more so that you got yourself a buffer? So if things go up even more or you lose your job, you know, all these kind of things that do happen from time to time, what are you doing to protect your family household, I think is the question you want to address.
Interesting, and listeners might have their own contribution to our conversation, but the Reserve Bank Governor is in the firing line. You might have noticed in some of the headlines, because he came out yesterday and said, well, if you've got some difficulties at home and the family budget's under pressure, think of getting in a border, renting out a room. I think he even said, get a second job. But coming from someone who's a wealthy Reserve Bank governor, that actually generates a little bit of ill will, doesn't it? Because ordinary people who have someone saying rent out a room to help ease the pressures, we don't want to hear those things. And maybe he's getting the fiery brunt of it, and maybe not the government. But anyway, your thoughts here?
Well, look, I mean, it's a ridiculous statement that he's made in that respect, because, I mean, he earns roughly $1 million a year. He's the highest, I think he's the highest paid public servant in Australia, if not one of the highest. So, a lot of these people unfortunately can't relate to it. I mean, okay, it's all well and good to say have someone in your house, but that might not be possible for many people. That's the first thing. And the second thing is, if you're like me, you got a young family, there's all sorts of issues of noise and privacy and everything else. I mean, it's just an impracticality. Might be suitable for some, but we're talking about a small percentage, I would have thought. So it's a naive statement, but I think reality is, I always take the view that listeners have to take the view of taking personal responsibility to saying, well, how do I and our family navigate through this? And take charge, because we can't control what other people are going to do. And that's the reality of it.
Alex, there's obviously going to be concerns that may be raised today for those who are vulnerable, where the expenses at the end of the week are outweighing the revenue that's coming in. And love to hear from people today who are experiencing a little tightness around the family budget. But the conversation today, I anticipate, is going to be all about different areas of finance, and there might be opportunities too that people will be looking forward to taking when things get tough. Interesting when we look at some of the economies around the world that are doing things a little bit tougher than we are in Australia. Any just a brief overview here, because we are actually vulnerable to international pressures as well. Other nations, how are they going, and how does that affect us?
Yeah, well, look, I mean, you're absolutely right. Australia is certainly affected, and what's going on is very much global. A lot of it's a result of obviously what happened during COVID with the massive stimulus and huge increase in money supply. So that's, put a huge turbocharge, if you like, into the economy. And the other thing that doesn't get a lot of media attention is actually the impact of war. War is very inflationary, and it has a big flow-on effect to supply chains and so forth, particularly with all the sanctions going on around the world at the moment. So that kind of thing is inflationary. So it's a global thing. It's not purely an Australian thing. So in that sense, we are at the mercy of global activity. But the Reserve Bank has a very blunt tool, and therein lies the problem. Just pumping up interest rates isn't going to solve a supply chain issue. It's too limited a tool. But if you look in Europe and America, they're both drifting into recession. Some economists are saying that they're already really in it, because the thing with recession is you don't really know until the stats come out once you're well and truly into it. But they certainly are drifting into recession. Australia hopefully may dodge it. and we're certainly very lucky with very low unemployment. And that's what's certainly keeping the economy up. That's why the figures aren't too bad. And of course, why house prices are still, seem to be heading back north. So,
Well,
it's interesting.
given we've got
Interesting time.
the temperature is rising and there are economic pressures, we're going to get very practical in just a few moments. We're going to ask Alex. We often will leave this to the last part of a longer segment like this, but I'm going to ask Alex to get practical. So grab a pen and paper, or whatever you do to make a note. Or make a mental note. We're going to talk about some practical things in just a few moments. Also, opening talkback lines right now. 1-800-316-316. Why don't you venture to ask a question, make a comment? You might have your own scenario. There might be something you're noticing in your own community that's being affected by the economics that are going on. 1-800-316-316. You might be a small business owner. You're wondering what the future holds. You might be a householder. You're wondering about house prices. Well, we'll get some comments as we go. 1-800-316-316. We're back with more Alex Cook in just a few moments. Alex Cook is our guest. He is the founder of Wealth with Purpose, a former stockbroker, successful financial planner, and Wealth with Purpose is a ministry to equip Christian believers to honour God with finances, teaching sound financial skills. Our talkback line is open right now on 1-800-316-316. Before we take a call, Alex, I said let's do some practical things right up front. For those who are feeling vulnerable right now, the pressure is on the family finances or your small business. What are some things we can do right now, practically, to help navigate the way forward?
Yeah, so look, the first thing I'd say to people is you want to get clarity around your spending. So to me, you build a spending plan. People often more colloquially will call it a budget, but I think budgets make people cringe. So build a spending plan. Look at how much money is coming into your household versus how much money is going out. And the difference between the two is your surplus or deficit. Now, if you're in a deficit, of course, you've got a problem and you need to look at how you can cut back to get back into surplus. But if you've got a surplus, the question is how are you going to use that to go forward and prosper? But once again, doing this spending process, though, you'll be able to analyze how you're spending money. Are you spending too much money on some things and too little on others? So, for example, maybe your rent's too much and maybe you have to move, or maybe obviously there's all the extras that we often have in our lives, the subscriptions, all those sort of things. So you think, well, do I really need that? And so you can tighten up and make some changes. Now, it's never about becoming stingy. You still want to enjoy life. However, the reality is, of course, for many of us, it's tight at the moment. And so having a spending plan will help you see where it's all going. And also look for opportunities to save money. Can I change retailers? Can I change here? What can I do to reduce and bring my costs down? Then inevitably, this is about building margin into your life and building so you can start save and put money aside for a rainy day. So that's really important.
Alex, what about if you're a home owner, you've got a mortgage, or you're renting? Let's stay with people who've got a home loan. They're looking at those interest rates rising. Practical thing here, what can you do?
Yeah, so to me, the very important thing, if you've got debt of any kind, is to have a very debt repayment plan. So you want to work out, what are all my debts? What are the interest rates I'm paying on each of those? And then look at your budget and say, okay, how much extra can I start paying off these debts so I can start chipping away at them and get rid of them early? Because the more you can pay off that debt, quickly, the less interest you're going to pay. And interest is dead money, especially on debt and especially on things like credit cards. So look at your debts, work out the order in which you're going to repay them, and have a very concrete plan as to how you're going to use your budget to pay down those debts. For homeowners, where you've probably watched your interest rate rise dramatically over the last 12 months, or perhaps you've got a home loan where the fixed period's about to mature. There are a lot of deals on at the moment for mortgages. It's very competitive, so it could be a good chance to refinance your home loan. And if you're very nervous about higher rate rises, because of course no one knows where it's going to end up, But if you are concerned and you can't afford too much more of a rate rise, then maybe you need to look at fixing again to protect yourself from further rate rises. And that's a call that you have to make, because at the end of the day, no one really knows where rates are going to go. But they're the kind of things you can do to start protecting yourself and really building, as I say, building margin and looking at how you can start saving money in the future so you can get ahead.
Okay, we're taking calls, 1-800-316-316. Let's take some calls. Steve is in Parkes in New South Wales. Hey, Steve, welcome along.
Good day, Brother Neil and Brother Alex. God bless you both and all your callers that ring up. I wanted to thank you through Christian Radio for helping me to keep the faith and soldier on, because you do give up and you do get down. But what I wanted to ring about is something that seems to be long forgotten in this country. Like we're seeing rising home loan interest rates, but another pillar to the economy. If the two great political parties can only put heavy emphasis on the resurrection of manufacturing, we start making stuff again. In the 60s and 70s, we had thriving manufacturing. And you reach a point, Brother Alex and Brother Neil, where you start producing more than you're consuming, and the exports can kick into the economy, which would add, like we've got mining and resources and the massive contribution made by farming.
Okay, but Steve, let's deal with manufacturing with Alex. Alex, this is an area, and perhaps, it's connected with what we're talking about today as we're getting a grip on what's going on. Here's an economic challenge that's been put there by Steve, and I think we all recognise that manufacturing has slowed or stopped in so many parts of our economy. Thoughts here for Steve?
Yeah, well, look, whilst I share his same disappointment that it's just become a tiny, tiny part of our economy, because with that, to me, there's two big issues. Firstly, there's a massive loss of skills. Because manufacturing, to do it well, you need engineering skills and all sorts of things that is really disappearing from our country. So I think that is a concern. But related to that, I think, is the national security concern that this causes, where we just don't have the ability to manufacture a whole range of things. Now, in saying that, the question is it realistic to assume that it's going to come back? And if it does come back, is it going to come back and hire lots of people, or is it going to be a lot more automation? The problem for Australia is it's a very high cost country from a labour perspective. And so it's probably, I think, fairly unlikely that it's ever going to really take off here. Plus, Australia's highly regulated and over-regulated, and we have very expensive energy, as everyone knows. So all those factors combined make a return of manufacturing to Australia, I think, improbable, as disappointing and probably wrong as that is. I think we need more balance in our economy, and just from a security perspective, I think we do need manufacturing. But I can't see that happening with the issues going on.
Well, Steve in Parkes, thank you so much for your call, raising a very important and challenging issue. We're taking calls, 1-800-316-316. Let's take a call from Melinda in Warwick in Queensland. Hi, Melinda, welcome.
Hi, how are you?
Very well, Melinda. What are your thoughts?
My thoughts are there's a few things we can do. We can say, well, the government needs to X, Y, Z, but the reality is we also, as a community, need to start looking at where we throw on our money when we do spend it. In Warwick, we have a really good community, and we've set up a community market garden, and in it, all sorts of people are encouraged to come down, and we also it's like for me, like I have a small backyard, but in my backyard I've got orange trees, mandarin, lemon, lime, and grapefruit. Now I've just picked a bucket load, and I'll take them down, and sometimes I can just exchange them for the other veggies that I need. Sometimes I end up giving them away. But
Melinda, you're raising just a fabulous insight here, because there is a community that can rally and recognise needs that are just there directly with our neighbours. Alex, what are your thoughts here for Melinda?
To be honest, I think she's hit the nail on the head in terms of one of the best ways to navigate through challenging times, especially in those kind of areas. To me, it's a fabulous opportunity because and it's an opportunity for the church because this is a way we can love people and help our community around us. So it's a wonderful evangelism opportunity, but it's a great way of tangibly helping people through. But I think with the way the world's going, a move back to that smaller community working together is perhaps where it'll be forced to as economic pressures really start to bite. So I think it's great. And the fact that you're thinking like that already is great. In fact, I'm actually doing the same thing. I'm actually in the process of building a chook shed, which is testing my woodwork skills. And that's about building that resilience and so forth. So I think you've hit the nail on the head. It's a great thing to do. It's teaching people also skills that I think have largely been forgotten. Let's be honest, the average city slicker wouldn't really know how to raise food or do any of those things. So communities doing that and helping each other out. And I think this is an opportunity for the local church also to bring people together, to help people out. And become the centre and hub of helping people. It'd be brilliant.
Melinda, thank you so much. A great contribution and more calls to come. We're going to take more calls after Vision National News. You might have your own say, and it could be on any element. Lots of dimensions that we're able to talk about today. Alex Cook is our special guest. Our talkback line is open on 1800 316 316. We're back with more after Vision National News. Wonderful to have you with us on this Thursday edition of 2020. If you're just joining us, we're talking finance again today with a big picture. What's happening in global economies, what's happening in our Australian economy, and how that affects us all, whether we're in business or whether you're just managing that family budget and things are looking tough. Inflation figures came out yesterday, higher than expected, 6.8%. Energy prices on the rise, could be up as much as 20 to 30% over this next year. Pressure is on, so we're concerned about how we navigate the family budget. And any issue you'd like to raise with Alex Cook, our Vision Finance commentator and the founder of Wealth with Purpose. Our talkback line's open on 1800 316 316. Alex is a former stockbroker, successful financial planner. He's the founder of Wealth with Purpose, and he's even building a chicken coop in his backyard. That's a new area of expertise that he is becoming equipped in. A 1800 316 316. Alex Cook, I think it'd be good for us to just keep taking calls, if that's good for you. Let's hear from Cindy, who is in Benalla in New South Wales. Hello, Cindy. Welcome along.
Hello. I got two questions. One's about house insurance and one's about saving on sewage on your water bill. When I signed up, they did a start and end date, and that was for 1 year, and that ended 6 months ago, but they're still taking money out of the bank every month. Am I still covered if I need to make a claim, or do they say it ran out, so we don't need to pay you?
One of those things, isn't that a pain, isn't it? When you're paying an insurance premium and you've stopped your insurance premium payments, but they're still taking your money. Let's tackle that one first. Alex Cook, your thoughts for Cindy?
So, I was just trying to understand the question there. So the insurance, you've put a stop on it, but they're still charging you?
They when I signed the house papers through the bank, they said I need to have insurance, and they did a start and end date that was for 1 year. And when it ran out 6 months ago, they didn't send me any papers. They just kept taking the money out. But because there was an end date, what does that mean?
Alex?
Yeah, so generally when you've got a loan, it's a requirement of the bank that the house is insured, right? That's generally a term and condition. So I suspect that the insurance is still probably going if they're still charging it to you. However, you'd probably be able to swap. So if you can find a different Like the bank's usually not too concerned which insurer you use. So if you can find one that's better value and then provide that certificate of currency to the bank, so they stop charging you for the one that they seem to be charging you for. But it's a condition of bank loans that the house is insured. All banks will force that before settlement.
And on the net, it says you don't really need to have insurance. It's not legal. You don't have to have it if you don't want it. And I thought, great, I'll put the $100 towards the house in payments because, but Mum said don't do that.
See, but the reason why, so usually the bank, as I said, requires it as
Yep, Alex.
Yes. So usually the bank requires it. And the reason for that is, say your house burns down and all of a sudden you can't pay, the bank then doesn't have a house that they can sell if it needs to be rebuilt. So that's why they insist that it's insured. So that way if something happens, and you can't also pay the loan, the house is still insured if something happens to it, and then they can replace the house and so forth. So it's generally a condition of the loan. As I say, they usually require it before they even settle the loan. It has to be in place. Yeah. So it doesn't surprise me they're still charging. But if you can find a better deal and provide them with that certificate of currency, I mean, to me, it's important that you insure anyway, just because of all the risks these days, with fire, flood, all that sort of stuff.
Yeah. So I did phone Elders, but they said they're going to charge me the same and cover the same. So I didn't find anything better. So do I just sign up with it? Is there somewhere better?
Look, the only thing I would say, and it's important, there are aggregator sites, but you can shop around. So if stockbroker.com, they may do comparison, but there are a lot of comparison sites, but just shop around, see if you can get a better deal based on the same level of cover. The bank will require a certain degree of value though on the house. So you just got to comply with whatever their terms and conditions are. So I'd call the bank first and say, what's the criteria that we have to satisfy?
Very quickly, Cindy, you had a second part of your question around water rates.
I was reading my water bill, and on the back of the water bill it says I pay $60 sewage, and I'm thinking, because I go on the net, I search for things, and I'm a gardener, so I got this giant compost bin. I got 4 of them, and I thought, why don't I just chuck it in the compost bin? It's just me living here, so it's not going to build up too heavily. And I've been doing that since January, and I'm thinking I could save $60 a month and put it towards a house bill. Is that a good idea? Because they call it humus, human manure. That feeds the worms in the garden.
Alex?
Yeah, look, I think compost is a great idea, gardening, but in terms of getting it removed from your water bill, I would give them a call and see if that's something that they would consider. I've never actually thought it through, to be honest. So I don't think I could give you a great answer, to be honest.
Cindy, thank you so much for your call. 1-800-316-316 to join in our conversation. Let's keep taking calls. Let's hear from Katerina in Adelaide. Hello, Katerina. Welcome.
Sorry. I was just wondering about... my parents heard about this pay $1 a day on your... I don't know if you know about this, Alex, but where you pay $1 a day and it supposedly reduces your interest because it resets the balance every day. But I'm not sure about it. It sounds a little bit odd. I mean, I can see how it might work, but when your interest that you're paying is so much higher, I don't know whether it resets it.
Yeah.
Alex,
what are your thoughts here for Katerina?
Sure. No, if I've interpreted what your parents are suggesting, it's actually a very smart way of reducing your interest. So essentially what they're saying is by paying $1 a day, or what's that per month, $30 to $31 extra a month, you're reducing the principal on your loan, and therefore by default the interest bill will be less overall. So it's basically a good kind of budgeting strategy. Essentially, you're increasing your loan repayments by $1 a day. Now, in practical terms, you might be doing it if you pay your home loan. Depends if you pay your home loan weekly, fortnightly, or monthly. You're going to pay it through that. But nonetheless, it's a good, simple way, and conceptually, it's a great idea because essentially you're reducing the principal of your loan a little bit quicker. So often, if you go to a mortgage broker, when you take out the loan, they'll say, do you want to pay monthly, fortnightly, or weekly? And typically it's better to pay weekly because you're paying more of the principal off in effect, and hence paying less interest overall. You'll pay off a weekly loan quicker than you'll pay off a monthly loan. So that's where the strategy idea is coming from your parents, I think. So it's a good idea.
Katerina, thank you so much for your call. 1-800-316-316 if you'd like to interact with Alex Cook. Let's take another call. Shane is in Williamstown in South Australia. Hi, Shane. Welcome.
Yeah, morning, Neil. Morning, Alex. How are you?
Good. What are your thoughts, Shane?
Thanks.
Okay, I've got a couple of questions for Alex. One, is mortgage interest and business loan interest calculated into the inflation rate?
Alex?
Sorry, that's the first part again. Is your mortgage...
Is our mortgage interest and our business loan interest calculated into the inflation rate?
So they're basically, in terms of how they're calculated, is the bank is setting that, but they're setting it against the cash rate. So inflation affects it, right, in the sense that it's a driver of the Reserve Bank making the decision. So if inflation rises, and
that's not what I'm asking, Alex. What I'm asking is, does the RBA and Philip Lowe calculate the mortgage interest rate hikes and the business loan interest rates hikes into their calculation for the inflation rate?
Okay. Sorry, are they including it in there? It's a good question. I don't know the actual makeup, and that's where I think you should be slightly skeptical, because obviously the inflation basket, right, of goods and services, so rent, mortgages, the whole bit, and you don't get told unless you really go and look for it, you're not going to get told what's making up the basket. And so is the basket really effectively reflecting what's actually going on? So yes, they would be included in their thinking, but what percentage of it, I wouldn't have a clue as to how much they're factoring in. Wouldn't have a clue.
Shane, you had another one. Let's be quick. What was your other question?
Yeah. Well, I noticed on the news last night that it was 6.8%, and most of the items that they did highlight were non-discretionary purchases like fuel, food, etc. So if the interest rates for business loans are calculated into that, and people like a supermarket or a bakery have got a mortgage on their business, they've got a business loan, and they then have to pass it on to consumers, isn't Philip Lowe and the RBA causing inflationary spiral by raising interest rates all the time?
Alex?
No, I don't think. But putting rates up is not causing the spiral itself, if that's what you mean. To me, the real drivers behind inflation are predominantly the government policies that underpin it. So whether you look at the energy policies, that's having a huge effect. I think the war is having a huge effect because it has supply chain issues. So there's a whole range of things that are going into causing it. But then also let's take the immigration policy. So we're bringing all these immigrants, which is driving up rents, and rents is a part of the inflation mix. So that's also pushing into inflation. But then the Reserve Bank is trying to solve that problem through interest rates, which it can't do. It's too blunt an instrument to solve each of those issues. What you actually need is the federal government to change its policies that will actually reduce inflation. And that means changing energy policy, means changing immigration policy. But it seems to me that the federal government would rather pass the buck and blame it on the RBA than the other way around. So it's a challenge. And I feel for the RBA. I think they're between a rock and a hard place because they've trying to control something with a very blunt instrument. It's not possible to do.
Shane, thank you so much for your call, and we'll take some more calls. Let's take another call. Henrik is in Perth, WA. Hi, Henrik. Welcome along.
Thank you. How are you?
Good. What are your thoughts, Henrik?
It seemed to me, it's a bit sad that it seemed to me that many Australians actually fail to see what the real problem is. And the real problem is that, in my opinion, as long as we have Labour and Liberal in government, things are never going to change. There's a very small party that's growing very fast at the moment called Australia One. The leader,
Henrik, you just cut out there. Say that again.
Yeah, there's a very small party in Australia called Australia One Party, and the leader of that party, Ricardo Bossi, according to his calculations with the economy, then Australians actually don't need to pay more than 2% expenditure tax. And if they're paying that, then the economy will still be thriving and doing well. But because Australia is sending millions and millions of dollars overseas for only God knows what, that's why, Australians have to pay so much tax. That's why everything is so expensive. And that's why they're increasing everything, because they're making harder and harder for families to get by.
Henrik, that's interesting. And Ricardo Bossi, who leads the Australia One Party, it takes a lot of minor parties and people who are agitating for different ways that an economy can be run. Any thoughts here, Alex Cook?
Yeah, look, it's an interesting one. Firstly, I fully agree with the first comment that Labor and Liberal, that if we keep voting for the same two parties, we can expect things just to continue down the same path. Both of them, even though they have different rhetoric, at the end of the day, follow very similar policies. They're both very hell-bent on a big Australia, which I think, whilst immigration is normally a net positive, I think that in itself is a problem. That also has a negative effect, for example, on wages. There's no meaningful tax reform from either of these parties. And the size of government, which I think is a real concern, continues to grow year in, year out. And so government is crowding out the private sector and reducing the prosperity of the nation. So I think both parties, I'm not a fan of either of them. I think, as I say, the rhetoric and the policies don't match up, and the policies are largely the same between the two of them. Is Ricardo Bossi the answer? That's a big debate. I'd probably I wouldn't be so sure about that. But nonetheless, I'd love to see a genuine alternative. And I think if you look at the primary vote for the two major parties, that is in decline. Like Labor got into Parliament on 30% of the primary vote, so 70% of the population voted against them. So I think I'd love to see genuine change. And the other thing I would do is get rid of career politicians. You should only be allowed to have 1 or 2 terms at the absolute most, maybe extend the terms. So this is a huge topic in terms of the kind of reforms we need, but we're certainly not going to get it with either of the two parties in power.
Okay. Henrik, thank you so much for your call. Let's take one more call. Eugene is in WA, in Perth. Hey, Eugene, welcome along.
Hi. I was just wondering for Alex, the first question is that regarding migration. Why can't we have a smaller migration intake rather than a large influx of migration all over Australia that causing a real housing shortages in Australia, number one. And number two, why can't Australia have a rent freeze where instead of having rent bidding and all the different schemes going on, why can't the government allow to have a cap on rental across Australia so that people are paying a reasonable amount and not overly priced?
Eugene, good questions.
Great.
Quick response to those, Alex.
Okay, so the first one, migration. So Australia, very simply, is a population Ponzi scheme. Both parties, or the two major parties, want to bring in lots of immigrants because it props up what's called our GDP, gross domestic product, and therefore it makes it look like the country is doing well and growing at a faster rate than it really is. If you look at the real figure of what they call GDP per capita, you'll actually see that that's mostly in decline and that Australia's standard of living continues to drop year in, year out. So to me, immigration at a small level is a net positive, and I say that as someone who's married to an immigrant, but I think it's generally positive, but it's far too much. The infrastructure can't keep up, hospitals can't keep up, so it's a disaster for Australia's standard of living. So, and survey after survey says Australians want less immigration. They're happy to have it, but less of it. So that's the first one. But you've got to convince the two major parties that it's worth doing. The second one, rent freeze, that's one where I don't think is a good idea. It's one that's been raised a few times, and I know the Greens are behind, pushing that one. But to me, that destroys the free market. But it also assumes that the renter is the only one that's suffering, not the person with the landlord. And the reality is rents have gone up, say, 15% over the last year. But if you've got a landlord and you're living in their investment property, their mortgage repayments have gone up 50%. And all sorts of other costs, insurance costs, maintenance costs, all those sort of things have all gone up. So both parties are suffering. So having a rent freeze would mean that the renter is potentially okay, but the landlord would suffer, and then you have defaults. You'd have people. It would be a massive disincentive for construction companies or investors to bring on new supply if rents are going to be frozen. So I think a rental freeze would be disastrous for the economy.
Eugene,
even though it sounds good.
Thank you, Eugene, for your insight. No more calls. Time is running short, and I always like to come around biblical foundations for the sorts of advice that you offer, Alex. This is an area of specialty of yours. We haven't got a lot of time to talk about that today, but listeners who are thinking, where does good wisdom on finance come from? We might be thinking we would call on God and the things that we might be able to glean from a systematic study of the scriptures. And some of these principles that you talk about, they are coming from a biblical foundation. A lot of people are looking for financial wisdom outside of a godly foundation. But Alex, just very briefly, because we don't have much time, the value of looking at biblical wisdom as a foundation for how we look at finance. How do you see that?
Yeah, well, look, one of the awesome things about the Bible, and people often don't realize, is money is the most talked about issue in the Bible. And I think that's because God knew that we'd struggle with it, not just in a practical sense, but more just in a spiritual sense. It has a profound impact on our life. It has a profound impact on our relationship with God himself, because people often, fall in love with money and they end up serving money as an idol. So God knew we'd struggle with it. And so the Bible is just chock full of wisdom on how we should think about money and how we should act with money. And so, the principle we like to teach is the idea that really the money we have is God's, and we are his stewards here on earth, and we are called to use it to do good. I say that money is just a tool, and obviously we've got to meet the needs of our own families and so forth. But beyond that, it should be a tool for doing good. In fact, one of my favorite proverbs is Proverbs 11 verse 25, which I think is appropriate at this time of year when we're going into the end of financial year. And it says, a generous person will prosper. Whoever refreshes others will be refreshed. And to me, as Christians, we're in the refreshment business. We should be going out there and trying to bless other people with their lives. We're talking about on air before, you talking about Visionathon. That's about, keeping Vision on air and growing it so it can reach more people, because as you listen to a lot of the testimonies of people calling in, it's because Vision is refreshing them. It's actually inspiring them. It's encouraging them with their walk. And that's exactly how we should be living our lives, and what we should be doing with our money is refreshing others. So it's a great thing to do. And Bible speaks to all these issues.
A big cross-section of principles to rely on, and even from, we love to talk about the generosity aspects, and there are charities that are under big demand as things tighten in the economy. But also from the perspective, Alex, and let me just say 60 seconds here, Alex. Hey, here we are. It's the 1st of June today. 30th of June is rolling around, end of financial year. Lots of us will be thinking about, well, it's tax time. Is this something that I need to be considering? Is there a biblical foundation around taxation and those sorts of things? It's tax time coming up. What are your practical or spiritual insights there?
Yeah, look, absolutely. So it's a great chance to reflect on your finances. In terms of the biblical side, the biblical side is clear. It says, give to Caesar what is Caesar. So as Christians, we need to honour God and do our taxes honestly. But I think as good stewards, you'll also minimise your tax in ways that are perfectly legal and ethical. So that's the principle that sits behind it. But in terms of this time of year, some great opportunities in a range of areas. So one, for example, is superannuation. There are options available to people where they can make contributions into their super and claim a tax deduction. So because we're only got such little time, I'd say to people just to look these things up or seek help, whether you go and see an advisor and learn about these things. But superannuation is a great thing to be considering at this time of year. And also any other legitimate deductions you might have that you can claim and reduce your tax liability. So there are a couple of things people to think about. And of course, the other big one is capital gains and losses that you may have in your investment portfolio. It may be a chance to look at those and potentially, crystallize any losses that people probably don't realize they can carry forward those losses and offset them against future gains. So lots and lots of things you can do. The more we don't have time for, obviously, now. But yeah,
we don't now. But Alex,
time to plan.
Let's make a point to set a date just shortly before end of financial year, so that we might be able to talk through some of these things more deeply. Lots of listeners will be interested in those issues where you can save money and deal with integrity with tax time. So we'll set a time, and we'll, if you're available, we'll have you back, and we'll spend a little extra time unpacking some of these things. But for listeners to connect directly with Alex Cook today, you can do. He is the founder of Wealth with Purpose. There is a website, wealthwithpurpose.com. And as I often will say, there is free resource there on the website, ebooks, the My Toolkit, there's free videos, there's podcast content. And even if you're wondering, these conversations we have with Alex, yes, these are available on podcast as well. You can get good, biblically sound financial wisdom. Connecting with Alex Cook, wealthwithpurpose.com. You can follow Alex on Facebook or on Twitter. There's even an askalex@wealthwithpurpose.com email that you can use as well. Alex, great getting your insights. Thanks so much for sharing them with us today on 2020.
My pleasure. Thanks, Neil.